Hey everybody, welcome back. So mortgage rates, well, they're just being a little bit of a bugger, right? They won't go down before the election, and that's not unexpected, all things considered. We're going to get into that. But the question is, will they go down after the election? And that is the bigger question. And let's hang on and let's just find out. Okay, here we go. The biggest question that a lot of folks are saying are, okay, mortgage rates have been going up since the Feds dropped their rate, kind of like what we predicted. The Feds are meeting again here shortly, which again, remember, they don't affect long-term mortgage rates. That's the HELOC, your car payments, as far as the interest rates for cars, your credit card payments, home equity line of credits, your HELOC. Commercial lending and what banks lend to on a day-to-day basis, that only changes once every 6 weeks-ish, all right? So long-term mortgage rates, well, they go up and down every single day. So the question is, why haven't they been coming down, and what will it take for them to come down? Plus, we're going to talk about what happened in October as far as our weekly metrics. Hey, what's come on market? What's gone off market? What's been our trending pended average? How many days on market are sellers looking at? How many homes do buyers look at before they present an offer? Those kinds of things. So hang on and let's get into this a little bit. So first, mortgage rates. Probably one of the top three factors that come into play when we talk about buyers and the real estate momentum, because hey, we're bucking the trend nationwide. There are some other areas that are not doing as well. However, we're one of the five sweet spots still across the United States, and we're still doing amazingly well. In fact, Pended sales for the month of October were up 44% year over year for the same month. We're about 5% still above year to date, which are still good numbers. So when we take a look at this, and we take a look at that chart there, which is a little small for you guys, but you get the gist of it. The bottom is where the Feds, that's where they reduce rates by 0.5%. And then, of course, as you see, it's been on an upward trend ever since. So the question is, why? Okay, well, remember, because mortgage rates are based off of, the bonds and mortgage-backed securities, that you follow the 10-year treasury, although they're not tied together, they freakishly follow each other. And when we take a look at the administrations, the current administration, and potentially a different administration, we have Donald Trump, and then, of course, we have Kamala Harris, and two different ideologies altogether. The investors, well, they're not really excited about either one of them. One is the status quo. One is going to be more pro-business, pro-economy, lowering taxes. And that sometimes has a negative effect because then, well, you still have the government spending money, but if they're collecting less, well, how do we offset that? And that's where we get the bonds and treasuries from Yellen that, well, has a negative impact, which then, of course, can affect inflation. So all things considered, the investors just aren't happy. That's the nut at the end of the day. However, what are we seeing? So when we come in and we actually start taking a look at the news headlines, and as you can see, our 30-year fix, it has gone up. That's your left-hand chart there. On the right, we're seeing some of the highest mortgage rates that we've seen in 4 months. And the bottom left, look, people are being super smart about their mortgages. It's not that mortgage apps or we don't have buyers, because we absolutely do. So if we take a look at what Freddie is in our average 7-day running average here, hey, listen, we're still 1% less than where we were at this time last year. And that is on the left-hand side of that chart. Then on the right-hand side, of course, you've seen some of those numbers. But here's the funny thing. When we take a look at what we expect to happen, basically from, now, November, December, Q1, Q2, first quarter, second quarter of next year, we actually are anticipating our rates starting to adjust, starting to come down just a tad bit as people kind of adjust and start predicting. But funny enough, if we start seeing a lot more volatility in the market, rates will come down. Investors are going to go into bonds. When the bonds go up, mortgage rates come down. That is an expectation. We're actually anticipating probably mid to high fives by the end of Q1 next year. And that's why a lot of folks are saying, hey, okay, let me not do a rate buy down. Let me just go ahead and stand fast for now. And when it gets to that 0.75% or 1% below where I am at for a refinance, then that makes sense to refi. All right, instead of spending money to buy down the rate. Anyway, so there's food for that. Hey, let's sidebar real quick. Everybody, what's this? That is a 9-volt battery. Right there. You, right now, today, Saturday, you need to go down to your hardware store or wherever you keep your 9-volt batteries. That does not mean you steal it from the kids. And more importantly, you do not steal the 9-volt batteries out of your smoke detectors and put them into the kids' toy in December. Go get a couple of extra. It's daylight savings time tomorrow. So that means we roll back, hopefully for the last time, instead of that seesaw. Go get some 9-volt batteries. Replace the 9-volt batteries in your home. Why? Because they're good for 6 months. And this time of year, you definitely want to make sure that your family is safe and that if something bad happens, that you're alerted. Dead batteries don't alert things very well, but they do chirp at night. Anyway, getting back at it. So when we come in and we start taking a look at the metrics, let's take a look at what's going on and why are we bucking the trend? Because you can see here on the left-hand side, it says average combined days on market, or CDOM, right? So we're actually up 2 days from where we were at year to date. Funny enough, we're up actually 5 days just for the month of October. Super interesting. We're still selling at about 99% of what we talk about for a list price to sales price. Okay. So if I listed $100,000 and I sell it $100,000, that's 100%, right? Okay. So we're at 99. So I listed at $100,000 and I'm selling at $99,000, 1%. We are within that realm and still actually doing quite a bit better than where we were at this time last year, which was closer to 97, 98%. All right. So if we come back here and we roll over and we take a look at our running day, 7-day average, look at this. So we have 771 homes that came on market, but yet look at that. 1,244 homes that went off market. Now, up above, it says, hey, how many price reductions? Well, we're down about 200, 250 homes that did a price reduction compared to a couple of weeks ago. However, you can see that that transferred into the expired and into the canceled listing side. One, it's seasonally normal. Two, people just don't really like to market during the winter. That's why for buyers, this is the time when sellers are most willing to negotiate. Just saying, because they want to get, they want to move on. They want to get their home sold. They want to do things. You want to get into a home. Don't go on vacation like a lot of other buyers. There's still a massive pent up demand. Because here's the funny thing. When we start to see rates start to come back down into the low 6s, high 5s, that is going to be enough to bring a lot of those buyers that have been sitting on the sidelines back into the market. And so when we talk about taking a look at what is going on in the market, hey, everybody, remember, like, subscribe, do us a super favor here. Hit the bell. Tell us that you like it. And then if you really like the information, subscribe. Funny enough, did you know that 98% of the people that watch our videos, it's not quite that high, it's like 92%, are new people coming in. And so our channel continues to grow. There is no marketing, but do like and subscribe. It helps others to see this really great information. All right, moving on. So when we take a look at this chart right there, you can see that the blue line, which is our inventory, which seasonally, as you can see on the left, which is circled, it's seasonally normal to come down. And then, of course, normally the red line, which is pended, or sold, I should say. No, it's pended. Those come down, right? And this year, we're actually heading in an upward trend. And part of that is because of the rates and what happened in October when we hit down into the real low 6s. That brought a lot of people out. And remember, so we're looking in the rearview mirror when we look at solds, and solds are up, pendeds, those are in improving because we're just seeing a little bit more activity from buyers. Part of that is latency, but we are expecting to see that continue as we see rates start to hedge downward after the election, which I think it'll be more towards Q1 when we see more significant movement, even though they had bad employment numbers, which should have brought the rates down, but it didn't. Anyway, they're scared about the presidents. Don't like either option, but nonetheless, there you go. But look at this. Here we go. So again, when we take a look at sales price, you can see the red line at the bottom. That's been in a upward trend. Inventory, as far as active listing prices, those have been coming down. So they've been kind of meeting in the middle. It's actually a very good trend because all things considered, year to date, the average sales price is about the same as it was last week. Same with the average list price, which has been coming down, seasonally normal. When we take a look at October, look, we ended the month with about $10,000 less as far as average sales price. Average list price was actually up a little bit. When we talk about, okay, so let me qualify this. We're actually up 9% as far as the month of October. However, over last week, we're at $10,000 less. Let me make sure that was clear. We're at $860,000 average sales price. Today, we're at $10,000 less, or $850,000 average sales price, but still 9.8% above where we were at last year at this time. So hopefully that made that clear. Sometimes my brain goes faster than my mouth or vice versa. We never know. Anyway, moving on. All right. So let's take a look at our metrics. Let's take a look at the volume. The volume of what's in the residential side only of the Northwest MLS. The volume only is absolutely staggering. So in an awesome way, right? So where some areas are saying that they are down as far as actual sales volume, Pendeds are actually down. We're not. We're actually up. Let's blow this chart up for you. We're actually up. In fact, year to date, our solds are up 762, and of course, we're 2,972 more homes pended year to date. We're at 44.6% as far as pended for the month of October. So where other areas may not have been doing well, we actually have been doing very well, and we're seeing a lot of that activity carry across. And again, most of that was because of inventory that became available with resales and mortgage interest rates that actually dropped down quite a bit. So when we come back here, we take a look at the new construction side. As you can see, it's been steady Eddie for the last year. Actually, for the last 3 years, it's been pretty steady Eddie like this. So we're still seeing a lot of the advertising that is coming on for, hey, year-end sale, get $30,000 in, bonuses or rate buy down, 3.99% on a 2-1 buy down. This time of year is the best time of year to buy new construction, hands down. All right. You have a lot of builders that need to get inventory off. They've got the reporting they need to do. And so there's a lot of incentives, not necessarily in price. They need to maintain plat integrity or price integrity versus what they can do as far as sweeten the pie. And that could translate into actual dollars. And in the long run, that actually is a lot more advantageous if you are spending less to borrow money. That in the long run, 7 years or more, you actually find that as more of an advantage. So when we come back and we take a look at the metrics of what's going on, as you can see, so like last month, that downhill trend was just hitting that little small dip at the bottom. And as you can see, we trended in a very much an upward trend, and that is the sales price average. And as you can see, that has gone up proportionally with the sales price average of the active listings. So when we take a look at year to date, the average sold price year to date has stayed about the same, about $912,000. List price about $1,071,000. That is about the same. Both of them are up year over year. When we take a look at for the month of October, we saw a sales price at 4.5% higher. okay? Meaning that the average home that sold was actually higher by 4.5%. But the same week, so last week, we were higher by $15,000. This last week, this week, we saw $15,000 less average sales price. Again, that's just to help people with trend and where things are heading. That doesn't mean that, oh my gosh, new construction is failing. That's not it at all. It's just the average of what has sold. But it gives us a trend. It gives us that idea of what areas are having more of a dominant impact than others. Just saying. All right. So when we open this back up again, let's take a look at some of our new construction actual volumes through the year. So year to date, you can tell new construction, as far as number of sales, straight across the board, same as last year. Nothing new. When we talk about actual pendeds are down a little bit year to date. However, they're up 20% just for the month of October. And again, some of that has to do with some of the incentives that are being offered with new construction and time of year and interest rates. So yes, they're moving those right along. And yes, people are going to start taking some advantage of newer construction. You just have limited areas. You're going to pay a premium. That's why the resales took away so much business away from new construction. Just saying, it's just the way it is. People like to be in more specific areas, especially for some folks that are having to, go back to work. All right, let's talk about, when I say go back to work, meaning back in the office. Let's talk about bank-owned homes. Bank-owned homes, again, let's be very clear. This is a super boring subject for bank-owned homes. Why? Because we're only dealing with, like 100 homes. Well, back in 2008, we would have 100 homes come on market in 1 week, if not more. This is like nothing, okay? We, again, are one of the top 5 sweet spots across the United States. And these numbers aren't even 100% accurate because there are still agents that are marketing their non-bank-owned homes, meaning that they're just traditional sellers. They just checked the wrong box and didn't realize it. And yes, we do advise them. But when we come in and we take a look at the numbers year over year, you can tell, hey, look, yay, we have 107 bank-owned homes, which is good, right? Don't get me wrong. That's good. That means we have less defaulting borrowers. We have less people who have lost their home, which is bad, right? Sure, for investors, that's good. But for the average, for the whole, for the people we care about, our neighbors, that is good because the numbers are super low, all right? There are definitely better options out there for good investment or a good deal, all right? In fact, we have a website for good deals. Feel free to go take a look at it. All right. When we come back here and we do our little deep dive, look, even the month of October, it says all of our numbers were up. Some of those, again, remember, we don't have 107. We actually only have 82 homes that are bank owned. The rest of them, well, it's just, whoops, they just checked the wrong box. All of the numbers carry through all the way to the end because some of them that do not change from a bank-owned status, they go pending and then get sold, they get reported as such, but they're not really bank-owned. We're seeing most of the bank-owned homes, even though we have seen an uptick, yes, no argument, normal, okay? But most of that is down south, and I would say probably from about South Seattle, White Center-ish, all the way down to the coast. That's where a bulk of them are. Puyallup actually has quite a few. Well, I shouldn't say quite a few. Has a good amount. And then, of course, Elma and things like that. Normally areas outside of where the bulk of people that are looking at this video are considering homes. But if you're down south, there you go. Go take a look. They're at market value. They do paint, carbon, vinyl. Again, super boring. We just don't have enough volume in our market. Locally here is just too good. Our average time on market right now is 38 days. It is a little bit higher than what it was last month. That's okay, meaning September, which is seasonally normal. We will continue to see a little bit of an increase in market time. Again, seasonally normal. We're going to see a few less homes coming on market. Seasonally normal. We're going to see some listings cancel and expire. You're going to see a higher number. Seasonally normal. Don't be surprised and don't be swayed by misinformation that you might see out there. Watch this channel every week so you get the real scoop in real time. There you go. And I'll see you on the next real video. Have a great day. Happy November. Go get your batteries. Do it today. Swap them out. Only change your batteries and your smoke detectors if you like your family. There we go. There. How do you like that? Hey, here's a treat for you. If you want a free battery and you have a furnace that needs to be serviced, I will make sure that Larry goes out and does a service for you at a discount because you're going to get it off this video, and you'll bring you free batteries for your smoke detectors. Ping me, put it down below, let me know. In the meantime, you guys have a beautiful day. Take care.